Record. Hey,
Okay.
Oliver and Malcolm, how are you going?
Hi, Jamie.
Okay, so we're here to talk about self-managed superannuation funds, and I appreciate that you have asked me to give you a bit of a session on not only the basic strategy or whatever, but I'm also sort of happy to share some of the things that I do perhaps a little bit differently than the vanilla strategy.
Yep.
Superannuation, I trade and have superannuation. So I trade in a normal account or a couple of different accounts, and I have the superannuation strategy. So I trade superannuation very differently to what I trade anything else. And there's a number of reasons for that. And I guess it's a little bit longer term, that we're looking at. The other thing is, I think that I can sort of appreciate with you guys that obviously, longer term for a 20 or 30-year-old in their superannuation account's a little bit different for us because we're not 20 or 30. So I think that's maybe why I became slightly more aggressive with mine, perhaps. I wouldn't say I'm aggressive, but perhaps slightly more aggressive. So the basic outline of the strategy, I mean, you're very familiar with how to sell puts and things like that, but I think the basic outline with the strategy is, and what I like about it is, you sell puts to buy shares. So what you're essentially doing is you are buying shares for free, and you are really slowly building up what I call a full position, so then you can sell covered calls, etc.
Okay. So that's the aim, is ultimately covered calls, yeah?
Well, actually, no. The one you get the most money on is the selling of the puts.
Okay.
Which is interesting. Occasionally you will get put shares, but most times when you sell puts, you generally sort of don't. So one of the things that I have done is invest in a number of stocks that in companies that I like. Now, sometimes I'm probably a little bit immature because, like Mongo Database, MDB, I don't invest it because I don't like the name.
Yeah.
But I don't like the name, So, and Peloton, I'm not going to ever buy a Peloton bike, so it doesn't interest me, So I sort of like ones that I am quite interested in. So my main, I guess, criteria, and when we start to sort of write up a bit of a plan, is that the stock needs to have that baseline of 30% quarter-on-quarter growth. Okay, so are you aware of FinViz?
FinViz, yeah, but where do you find the quarter-on-quarter growth? 30%, okay.
So if you go into FinViz, and just an example, we may look at, what's a company that you like?
Well, Amazon, for example, my goal is to get 100 Amazon shares.
Okay, cool. That's fine. AMZM. Let's have a little look at Amazon. No. So if you call up Amazon here, you'll see here the sales quarter-on-quarter is 27.2%. And you can tell what the little thing, quarterly revenue growth year-on-year, and that's the quarterly earnings growth year-on-year. So that's a little bit, but probably everything you pick Amazon, but that's probably a little bit low for my portfolio, but I'm a huge Amazon fan, and I know that generally they do very, very, very well. So that's something that is in my radar, in my my particular watch list. Something else that I have is a shop. If you look at Shopify, quarter-on-quarter, 56.7.
Wow, look at that.
So these are the sort of numbers that I like in my portfolio. So you can go through and you can do a screen on sales quarter-on-quarter. In FinViz, you go in and you can set up a screener. And you can go for somewhere here, sales quarter-on-quarter of over 30 or over 25%.
Where did you go?
We've got a recording of this.
Oh,
yeah, okay. Right.
Sorry,
Yep.
so no, you go, you're in home.
Yeah.
Yeah. They're in home. I've gone here to screener.
Yeah.
Okay.
Is this a paid version, Shani?
No, this is free.
Okay.
Free version. So you can have descriptive screening, you can have fundamental screening, you can have technical screening,
Yep.
and you can have, so, you know, regarding moving averages, etc., or you can have all of them on the one thing. So I think
Yep.
NOLA in particular, I shouldn't be doing NOLAs, but one of the things you liked NOLA was the RSI. So you can put overbought and oversold. So you can screen for stuff on the RSI here if you want to, and you can put tickers in that you specifically want. But anyway, so with the sales quarter on quarter, you can put in here EPS growth quarter on quarter. You can put over whatever you want to, high, over 25%, over 30%. So you can screen for things that may be, you know, only in the, say, the tech sector, that are only in, say, the New York Stock Exchange, and go from here. You need to thin it down, obviously, quite a bit, but you can just go in and screen for things if you want to. So you might just go, okay, then I want to diversify my portfolio, so I really would love one in the energy sector.
Yep.
Something in the energy sector that is on the New York, and you pick a couple of other little, you know, parameters that you would like
Yep.
to be within. So that's something you can do. But quite often when you've been trading,
How do you save those, Shane? Because you put New York up there, but I can see that there's other countries down the bottom. How do you get it to do just New York?
they're on the
After
New
you've-
York Stock Exchange. You can go country
Oh,
if you want to. You can just go American.
okay. Oh, okay. So
And
they're, no, those other ones
all-
are fine because they're on the New York Stock
Yeah,
Exchange.
so that's the exchange. Okay, so you
Okay.
can do that, and then you can actually save that as a screener. So that's something that you can have a little bit of a play with.
Very good.
Yeah, that's
No,
great.
How
how do
would
you-
we save it as a screener?
I think the girl save screen.
Okay.
Yeah.
Mm,
Okay, so I've got a couple in there for things where I'm screening the 10 EMA. It's not loving me at the moment. Yeah, that's the parameters all set up for the 10 EMA, and that's what's showing up on the 10 EMA on the particular stocks that I've got that I was interested in.
mhm,
Okay, I'll put
mhm.
tickers in there. So, right, so just going back to here, you know how to set up a watch list in the side of your.
Yes.
Yeah, we've got that.
Okay,
Yeah.
so that's my self-managed superannuation fund. I have a number of others that I have, but that's my self-managed superannuation fund. So these are the stocks that are my kind of go-tos, I guess you might say,
Yeah.
that I will sell puts on and buy
Yep.
stocks into. There's a couple of others that I sometimes do, but as you can see here, I've got a bit of a range. So the lowest one there is $57 pins, and then I go all the way up to Amazon at 3349. Okay. So the idea of the strategy essentially is,
How many stocks would you have at, like, that's, how many is it good to hold at one time?
there's not really a
In,
good number to
Doesn't matter.
hold. I think though, if you are looking at, you know, like Malcolm with yours, your thing at the moment is you would love to own 100 Amazon. You've got the account size there that you could, it's difficult to sell puts on Amazon. So what you would probably need to do is sell puts on another stock, such as perhaps, you may be able to on Shop, but SQ, Tesla, Twilio, those sorts of companies, get the return and then buy the shares.
Okay.
Mm.
Yeah.
Okay.
I mean, Amazon is just sort of, you know, it's a wishful thinking thing.
Yeah, but that's okay. You've got to have those things. But the idea is that you sell a put down here, sell a put here. Let's not pick Amazon. Okay. All right, so you sell a put down. Oh God, of course, the pictures of that one. Okay, you sell a put down here somewhere, whatever it might be, and we'll talk about that in a second. You sell a put down here, the money that you for about in between 1 and 2 months out, generally 4 to 5 weeks out. And the income that you get from selling that put, you don't wait, you immediately buy shares. Generally, you will be looking to buy around 2 to 3 shares. Okay.
Of the stock you
Yep.
sold the put on, or
Generally,
not
but
on. Yeah.
generally you would do it from the stock that you're selling the puts on. So that's why we're sort of after these ones that have got that 30% growth, because we know that when they've had a little bit of a pullback, the idea generally is that they're going to go back up again. Okay. So generally sell a put after a couple of down days, because quite often the premium is a little bit better after 2 down days. The premium on this one, for an example, wouldn't be as good as what it was after these few days. Okay.
Yep.
And it wouldn't be anywhere near as good on this day up here as what it was after these 2 days. Okay. So you
Yep.
sell a put, the money that you get, you might buy 2 shares, and you wait and wait and wait and wait. You buy them immediately on the same day. So you would be buying shares at 361.69. All right, so you would be buying them at that price. Now, it may come down a little bit lower, and and then it might bounce up here. That's okay. You may not get put the shares, but you now own 2 free shares of Twilio, and the capital that you had invested, let's just say this, you've got 200K. 200K for an example. You've sold the shares, you've sold the put, and you've gone up to say 200,000 Ks, $600, right? But immediately you've bought 2 shares, so you've still got 200K there, but you've now got 2 free shares of Twilio. Okay.
Yeah.
And the idea of the 30% growth, year-on-year growth or quarter-on-quarter growth, is that in X period of time, you're going to get capital growth from these shares. Okay.
Okay.
So even though we bought them at whatever this price was here, $256 or whatever we bought them at, and we sold the put, they're going to be worth more in the future due to the fact that we've got companies that traditionally have 30% quarter-on-quarter. Okay. So you've still got your 200K sitting there, but you've now got 2 free shares that are going to go in capital growth. If you just had that money sitting in there, you're not going to get any capital growth on it.
Okay.
The idea that we're trying to do in a way is build up different vehicles for growth. So one is the selling of the put. You've got income for the selling of the put. 2, you've got the free shares, the capital growth on the free shares. 3, when we get up to 100 shares, when we get up to 100 shares, we can then have 3, which is the income from the covered calls.
Mhm.
And if we have a stock that's got dividends, we have 4 dividends. Okay. So what we're trying to do is have little multiple streams of income coming into our account, but still, and what I think is really important for you guys of this strategy, is still keeping your initial capital.
Because
Okay.
basically, if when we have sold puts,
Mhm.
then when we've had the income from the puts, we've gone and bought shares of a different company, haven't you?
Yeah. Yeah.
Not gone and just concentrated on that same.
That's fine. You can do that if you want to. That's not an issue. But the reason that I like to buy back into this is because I've researched these companies. I know they're 30% quarter-on-quarter.
Yeah, it's good.
So that's kind of the catalyst behind the whole thing. So if we just remember these drawings. Okay, so if we look at Hinge as an example, I was hoping that we might get oh, here we go. If we look at Roku as an example, Roku's had some, some pretty pretty basic, some pretty basic sort of down days. So its price is going not quite in the direction you'd normally like it to go.
Mm.
I'm just trying to get you on a chart that relates to where we are. Okay, so we've got the 100 here. We've got the 200 here. We're trading below both. Unfortunately, it's not a down day. Damn market, see, it's going up. I want it to be going down so I can show you something.
Yeah.
With Airbnb, if we look, when I'm looking at whether I want to sell a put or not, there's a couple of things that I do. So one of them is normally it'll be a couple of down days. Two, it'll be at a level that at the moment I'd be really happy with this because it's bouncing off the 100. It's using that as a little bit of a level of support. See the 100 there.
Yep.
I would put Matt's naked put indicator on there and see what it's saying. And notice that on that down day, it was actually saying to sell a put there on the down day. So
Yeah.
I would have looked at this and gone, okay, yeah, Matt's saying sell a put. I would have looked at this and gone, look, I can be a little bit aggressive and I can sell below this latest pivot point, or I can be mega, mega aggressive and go down to here.
Yeah.
Sell a put down there. One of the things that I would have looked at would be number one is how many shares can I buy if I sell a put here, bearing in mind that the shares at that point would have been $152 at the close of that black candle. Do you get that what I'm saying?
Mm-hmm.
Yeah.
I'm trying to get him off.
Yeah.
So it would have been at the close of that candle, it would have been $152. So we would be looking at getting some premium at the end of that day that was going to allow us to buy a couple of shares and, still have a reasonable, still be happy with the buying level of the shares. So, I would be reasonably happy. I would probably go down here on this one. I'd probably go down at the 128, 129.
Mm.
Bearing in mind that when you look how far it's come from here, it's a really, really good pullback down to here. Airbnb,
Yep.
my belief is we'll pick up again once, we start to look at travel, and they are already talking about that for Europe and France. For Australia by December. I can't see it happening, but anyway. So, that's what's going to dictate to you where you're going to sell your put. I usually try and get a delta of around 40, and I don't know whether on yours you have the delta included on your IBKR. Do you use the TWS workstation?
We're Schwab, we're just learning IBKR now, so we don't know yet.
Okay, that's fine. That's fine. And I don't know Schwab, as I said. So, yeah, but I mean, they're all very, very, very similar. But you can obviously get your price, and you'll know what you're going to
The
get.
strikes, how Ricky brings up the strikes on the
Yep.
thing. Well, that's the Schwab
The Schwab,
strikes.
Yeah.
Yeah, we get all of that, and then you can get a little box with the possible
Mhm.
probability as well, the delta.
So one of the things when you're doing one of the other key things when you're doing selling the puts is if you've got an account that's say 200K, I would sort of split it up into around 4 or so key areas of about 50K each, so that when you're looking at the stock, then you can sort of have a bit of an indication on how many contracts you can perhaps do 3 or 4 puts, but 3 or 4 contracts in a particular stock. But you sort of make sure that when you've got the 4 lots of 40, 4 lots of 50,000 or 5 lots of 50,000, say, you are staying within that. And if you do use more than your 50 grand, don't go and over leverage yourself, because it causes stress that you really
We can't use margin anyway
On super.
on super at Schwab.
Oh, okay. Yeah. Well, you can in IB, but okay, that's fine. So
Yeah, I thought-
Pardon?
I thought you couldn't use margin in super at IB either.
I don't know. I've got margin on mine. Yeah.
Okay.
Yeah, I've got margin on mine.
Okay.
So yeah, so then just obviously be aware that you don't want to do don't obviously buy more than what you've got. So I mean, I haven't got let's just as an example go to pins. I'll see if I can. Oh, well, you might be able to. Have you got two screens, or can you share your screen?
Yeah.
Yes.
Okay, well, what we'll do, I'll just.
So we take Shane over to that one.
Yeah, I'll just take you over to the other screen, Shane.
fine.
Hang on. Take, if I can,
Might not be able to.
and if I minimise it, there we go. And I'll take
Yeah.
Shane over to that screen and maximise that. Now, what did you want us to do to open the shop account?
Or
If you open your Schwab, so what we might do, have a bit of
Yeah.
a look and just sort of see as an example. Do you have live data?
Yeah.
yeah, probably good for you to see what we've got so that we can, so you understand how
Might be able to.
it's working.
May not show on a Sunday, I don't know, but I just sort of want to go through a bit of a live explanation of.
You can't see our screen yet, can you?
No.
No.
Let me say multiple participants can share.
Temporary on the what's going on there?
Gosh, a $10,000 day change.
I know, it's good, isn't it?
And it's saying that I'm allowing you to share, so I don't know, it just may not be letting you.
Okay, so I've got the Schwab account open.
But we've got to do share screen on the.
That's okay. No,
Zoom.
you can just tell me if you can just tell me.
No,
that.
down here.
Let me pop it in.
We'll pop down there and just say put share screen and see what happens.
Okay,
And then that's our.
is it that one?
Oh,
Yep.
Are you
Where's-
seeing? Are
can
you
you see it?
seeing ours?
Yes, yeah, I see it now.
Okay, well,
There we go.
we'll maximise Shane on the screen, will we?
Yeah, it doesn't
Okay.
really matter because
No,
No, you
yeah.
don't need to see me.
No, we've seen you.
So can you go to your where your option prices are? So
For what?
I don't know. Let's go into pins.
Yeah.
I don't know. I'm just trying to look at
Yeah.
the stock
You-
down a little bit.
You drive if you
Yeah,
know
well,
what you're doing.
the option changed.
To Pinterest?
No, I'm just gonna let me DKNG. Just let me pick a stock that we might have had a bit of. All right, let's have a look at DraftKings DKNG.
Okay. Well, you drive. No,
Yeah, you go to option chains. Okay, was it
DKNG.
DKNG?
Mhm.
Yeah, so DraftKings. Oh.
Yeah. All right.
Okay.
DKNG. Right. So at the moment, if I look at the chart for DKNG, the current trading price at close was $60.01. Right.
Mm.
Yep.
If, for an example, we were going to go below the last pivot point, which is just below the 100, the price would be around $50. Right. So if you have a look for about a month out at a price at around $50, so that's only 20 days to expiration. Go out a little bit further. Yeah,
The
10th,
first
1st of the 10th. Yep. And see what
50.
the price is for $50.
58.
58.
Yeah, so at the moment, you're only actually able to buy, because it had an update, but you're only actually able to buy technically one share.
Mm, mm.
Okay.
And
So
then I just want to show you here, just looking here. Oh, shoot, no, I always press that. Sorry. I was just going to show you the, oh, I've got to go back now to the delta, which we don't really understand, but this is where you see the delta.
Yep.
Is that what you're talking about?
We'll go to Greeks.
Yeah.
Greeks, yeah.
yeah, so the delta minus 0.1187, you'd be looking at a delta of around 0.4.
So we want 0.4.
Yes, I wouldn't be looking, I wouldn't look to sell that particular one. It's just not giving us what we want. And to be honest, that doesn't surprise me because as I said, we were on an up day and I can't, let me have a quick look at my thing here. All right, can you go to Barber?
Mhm.
Barber, right, is a stock that's not too bad, but it's not going real well at the moment, but it's had 3 down days, okay? It's had 3 black candles. So the lowest pivot point that it has is around about $152. So let's say we were happy to look at around 150, 145 per se, and that same expiration will do 150, 145.
So you look at 425.
Okay, so here's an example of what you might do. So at 145 and you get 425, if you sold a put on that, you could actually buy 3 shares
Okay.
of Barber at a really, really low price for free.
Yep.
Right? So if you sold that put, what you would do is you would immediately put that into action. You'd get your income of 425 would come through. And at the same time that you place that order, you would put a buy order for 3 shares at last closing price was 160. You can choose 2 shares or you can choose 3 shares.
Yep.
Okay.
Okay.
So that's essentially what you would be doing if you don't want to own Barber. And this is why I say your list can vary a little bit. If you don't want to own Barber, you can go, okay, then $425. I really want to buy 2 shares of Boeing. I don't often sell puts on Boeing, but I do buy Boeing with my share profits. But what you don't want to do is go having 30 or 40 different ones that you're doing this with because you won't get up to your 100 shares. Okay.
So concentrate on one and just add it.
Yep. So if you have a look at the moment, right, that 34 days to expiration, if you decided to buy into Barber, that's going to give you 3 shares in just over a month, right? Given the price of this, you could actually afford to sell more than 1 contract. All right. So yeah, so it would cost you 14,500 if you got put shares. Okay. So you've got, remember, just as an example, if we say you've got 50,000 at 14.5, you can buy at least 3 contracts of that.
Okay.
You're following?
Yep.
Yep.
Yeah. So you buy at least 3 contracts. So now all of a sudden you're actually buying 9 shares, getting 9 shares for free. Now, is that making sense?
Yeah. So in 5 months, you've
So
got your 100.
So
6
yeah,
months
so you're getting 9 in 34 days. Now, if you rinse and repeat that, you're going to have 100 shares in, a few months. So you just say, even if it took you 12 months to get your 100 shares, in 12 months' time, because we've got the quarter-on-quarter growth of the 30%, in 12 months' time, that will hopefully have gone up. Even if it hasn't, if it's gone sideways for 12 months, you've got to remember that you've got 100 shares, which is $14,500 worth that you didn't pay for. So even if the price goes down for a little while, it's not concerning really because they were free anyway. And as a good growth stock, the plan is that it will go up again. Okay. So when you look at this and go, okay, then, well, that's 9 free shares. If someone said to you, oh, okay, here's 9 free shares of Barber, which has been, up at $320. Here's, and by the end, just as an example, by the end of the 12 months, let's just say it was up at $252. They're free. If you've got 100 of them, that's 25 grand.
Yeah.
Mm.
Okay. So that's sort of how it works. And I know it's like step by step, but it's when I say to you, oh, in what you do, you can afford to get 9 free shares every month or so of this. It's like, wow, really?
Mm.
So
And
that's
so,
one
yeah, I was just gonna say,
stage
at the
two-
moment,
yeah.
sorry, you go on. No, go on.
So stage 2 essentially is when you do have that 100. Okay, and let's just can you see my screen by chance?
I can see you.
Yeah, we can't see I've got TradingView open on mine, but we can't see your screen.
No, that's okay. Lucky you. You can see me. That's just fantastic for you. You are the luckiest people in the world. That's all right. We'll stop your share in 1 second.
So we don't have any free while you're doing that free money tied, like money untied at the moment. Malcolm's got some that he's waiting for the dollar to bring it over, but we've sort of missed the boat a bit with having to do with the dollar.
I was waiting for the dollar to come up a bit. Yeah.
Yeah, yeah. Okay. Look, but look, this is as you can slowly free up your money. This is the strategy that I've found that I've got some really, really amazing returns on my. Can you see mine now?
Can see. Do we?
Yeah, maybe bring Shani back to the other screen.
Okay, we'll just take you back to the other screen. There we go.
Otherwise, she's looking at your colonoscopy photo.
Oh, that's lovely. Look, that's nice. Yeah, thanks for sharing. If I put
Very
my
clean colon.
fantastic. Can you see my screen now?
Yeah.
Oh,
no,
we can see you still.
Start.
Do we need to stop sharing or something, or?
Let me have a look. Screen share. Want to share the time. Where is my screen? I want to.
Before we had you in a little picture at the top. We had the TradingView.
Okay. Screen share, and then we go.
There we go.
Yeah.
That would work.
And there's your puppy. Yep.
So just looking at Barber, just so that you can see the chart that we were actually looking at. So what I was looking at there is looking at these 3 down days here, and as I said to you, these are the prices here. We looked at a below the low pivot here, and when I look at this, that I like that because it hasn't been down here for so long, and also it is a very low space to. A low price to buy, like strike price to buy. So once you do get, let's just say over a period of time, you get all of a sudden you've got 100 shares, right, that you've built. Okay, so obviously the next thing that you do is sell calls out of the money. Okay, and remember when you think about your DCA in these shares, your DCA is 0 because it didn't cost you any money. Okay, essentially. So you can sell out of the money calls, but you don't have to go too hugely out of the money. Get to make a good quid on it because they haven't essentially cost you anything. You know, you go not far out of the money and get really good premium. Because the closer you are to the money when you sell your calls, and you always sell your calls after at least a couple of up days. Don't sell it. That's when you'll get better premium. Okay. So you obviously wouldn't be selling calls if you owned 100 here because you've had 3 down days. You would simply wait. Okay. So the 2 ways that you can get the 100 is you can build up to the 100 shares over a period of time, or you can be put the shares. Right. If by chance you happen to be, say you bought those contracts and you happen to be put the shares at, we bought, I think we said 145, didn't we? Say you will put the shares at 145.
Yeah.
Then you know that those shares have cost you 145 because we spent the put money, right? So don't factor that into your DCA because we spent that money on buying 2 or 3 other shares. Okay.
Okay.
Yeah. Does that make sense?
Yeah.
Yeah. So don't factor it into your dollar cost average. Those shares cost you what they cost you because you already. spent that money. So those shares did actually cost you $145 each. Going on a chart like this, I would be really excited if I got shares at $145 on Barber. Okay.
Mm.
And because you will put the shares, then you can start to sell out of the money covered calls. When I put shares, I generally am a little bit more conservative when I sell them back. So I like to usually, try and make at least $5 on the shares each. So it'd be $500 on a contract.
Mhm.
Whereas when it's stuff that has been for free, I can, depending on the stock, with this one, I'd probably go $15, $20, $15 odd out of the money, depending on the price of the stock. But when it's ones that I have been given sort of essentially for free, sometimes I'll go a little bit further out of the money so that I keep the stock, because I don't want to give away my free ones.
Yeah.
When you get money on the call, you can just go and buy another stock or two. So another one. So you're still adding to the ones that you've got for free. So say you sell a covered call on Barber for, if you just look up your Schwab, say you got shares at 145 as an example, and then you said, okay, then I'm going to sell a covered call at 160. Now, what pretending what it's going to pay you, obviously it's not quite right because of this, at 160 for this, 30 odd days, 35 days.
34 days, $9.10.
Just as an example, if that was what it was, then you go, okay, then it's not going to be that, but oh, that's fantastic. Then I'm going to buy another 4 shares when I sell my call. So whenever you sell a call or a put, your calls will come later, your puts will come early, then you sell, you buy more shares with the call premium. So you can be selling a call and buying a put on the same stock at the same time, but you do it in different, we usually not exactly the same day, because you're going to be up days, your down days, but you will be and buying shares with the call that you've sold. 2 days later, you'll buy shares with the put that you've sold because the stock's come down a little bit. So you're building up, then you've got that double opportunity to build. So you're building your stock up. You might be buying each month. You might have an opportunity to buy 3 shares on the put with the put profits income, and then you might be able to buy 1 or 2 shares with the call income. So
when you own your 100.
Yep. When you've got the 100 there, if you get called away, you get called away, but you've made a profit. And with that profit, if you get called away, you can buy shares, a few more shares. So you might have, like I said to you, you might say, okay, then I'm not going to accept anything less than a $500 profit on that. You've got 3 contracts, that's $1,500. You go, oh, beauty, I didn't get called away, or sorry, I did get called away. I've made $1,500. It cost me $145. I've sold it for $150. 3 contracts. I'm really happy with that $1,500. I'm going to buy 10 shares.
Okay, because we tend to put our income from puts and calls back into the pool to sort of, we're going to buy so many shares of something else without looking for the free shares, don't we? We're looking more for the lower, what can we buy, the dip sort of shares. But
look, you can do that. That's not the strategy I use. This is the basic strategy that I use. And also, like I said, that I guess the basis is that you're not buying 487 different stocks.
Yeah.
13 of this, 4 of that, 6 of that, 9 of that. You're going, okay, and this is what do you miss out on some bargains elsewhere? Yeah, sure you do. But, those sorts of things that you're talking about, Noah, is what I do in my trading account.
Gosh.
Yeah. But I don't do it in my super account. I only want things that traditionally are going to give me that great return. Because then,
that's good.
Yeah, just to invest in companies, and I say longer term, because like I said, I'm, sort of getting to an older age now where my longer term is not like Ricky's longer term, you know.
Mm.
But yeah, so, and that's one of the reasons that I use the companies that I do use. So this is another list that I have, that's my joint account there. That's another trading account that I have, but my self-managed superannuation is primarily here. And you can have as many stocks as you want, because, you know, if you look at this, you might be able to sell puts on pins at the moment, but you certainly wouldn't be selling puts on Nvidia. Okay, because if you look at what they've done, like that's obviously Nvidia is on its way up. That's crazy town. You will not be selling puts on that at this point in time. Okay, that's just not going to happen. Pins, oh, it's tiny, died down a tiny little bit, but you know, a few days ago, yes, you would have been selling puts on pins.
Mm.
Okay.
And one thing we don't do is draw lines on our graphs, do we?
No, not, well, yes and no. I mean, not, I do lines, but that's, I don't
You
draw
do
them.
need these little, the little,
Yeah, they have the crosshairs. Yeah,
what was they called? I can't remember the bloody word now. Oh, what is the word? Horizontal, whatever. Yes, those.
yeah.
You do those. Have you got them set in your automatic thing so it automatically comes up with sold put and all that stuff?
Yes, we've got actually, well, shall I just show you what we've got with our trading view?
Yes.
Yeah, I'll just go into trading view.
Do you get what I'm talking about with that strategy though first, perhaps before we go dive off into something else? Do you understand what I'm saying about strategy?
Yes.
So
Yes,
you
we
can,
were 75% there with that, but not 100% before.
Hang on,
Yep.
something,
Yeah. What's happening?
something's happened.
Oh, something's happening with Shani. Where have we lost Shani?
Just hang on, just minimize that and see where she is.
I'll do a
No,
stop share.
What's happened?
we've lost you. Hey, just hang on a sec. What do we got here?
I've still got you. So
We lost you. Hang on, what's going on?
Because I pressed Safari over here. Maybe go back to Zoom.
Hang on, I'm just going to find it at the bottom here. No, can't even find Zoom. Where's it gone?
There.
Oh, there it is. Okay,
Oh, so maybe I can
there she
do
is.
it.
Back again.
Yeah.
Okay, now what did you want to do?
I wanted to, instead of having Schwab, I wanted to show Shani share
Oh, there you
screen
go.
with our one. So should I show screen up here? Or?
Yeah, so bring it up. Can you, bring it up and then we'll share screen, I guess.
Well, then I'll lose
Okay,
Shani
that's
again.
all right. We know how to get it back, so that's all right.
But I can't get Safari. I can't.
Well, hang on. If we minimize this screen, minimize that one and put that over there.
Mm.
And then what did you want to do?
Just going to trading view to show Shani what we've got on our trading view.
Okay, righto.
Oh, which one of you do it on this? Because I do it on the laptop.
Okay, there it is. So we'll bring Shane up again. Okay, now, and if we then put Shane over on the other screen, and then where's it gone?
It's on Safari. There.
Where?
No.
Where?
I
Oh,
don't know.
there it is. Oh. There it is. So we do that, and then we bring this one back, and we go share screen, and then we go. No, sorry, it's which one is it? Is it that one?
Well, we have to share screen. We'll share screen.
yep,
Yeah, you got it.
yeah.
Okay, now what did you want to
And
show
on
us?
charts, on the charts.
What do you mean on the chart?
On the chart to show Shani what we've got on our trading view chart.
What do you mean? I don't know what you
Okay,
mean.
the chart that shows the actual chart. Know what I mean?
Well, there's that portfolio.
Yeah, but that's not the charts.
Yeah,
That's
go
not
to
the graphs.
chart.
Well,
Yeah,
what did you?
there, the chart.
Mhm.
That. Okay,
What did you
so
want to show?
basically what we've got the,
Yeah, but
we don't keep all this all the time. So on our indicators,
Yep.
we've got, these are the indicators we've got.
Yep.
We don't use the MACD and we don't use the Bollinger Bands, but they're there.
Yep.
So basically when I'm looking at it, and I don't know about Malcolm, whether you look at support and resistance, RSI,
Yep.
moving averages and the trend lines, but you haven't got the sort of lines that Shaney's talking
No,
about.
but if you do trend lines,
If I just get my mobile.
and then where are we? And then let's see, if you do trend lines. No, where's it going?
Yep, that's the guidelines.
know.
Yeah, it's
And
on there.
sometimes support and
It's on there,
resistance
isn't
are different to Ricky's support and resistance as well. And sometimes they're not the same.
Where's it? Hang on. Yeah, so then I use Momo.
Yep.
Where's so that's Momo. Why are they coming up?
Which
They're
one?
there, but they're
Trend
not-
lines are there.
Oh,
If you
oh,
go
sorry,
around
yeah,
the
yeah, yeah.
side, they're there.
Okay, twice.
Awesome. Yep.
But
There-
then there's nothing on Alibaba though, is there?
No.
Yeah, that's interesting, isn't it?
Hmm.
Oh, God. I've got trend lines 3 times. Right. Now, is that what you wanted to show?
Well, what I'm saying is, we don't draw lines or say
But-
potentially entry. We don't put information. So that's the planning bit that we don't do. But
Yeah, but we look at the trend lines and figure it out.
and we talk, but we don't have a set.
So what
See,
do you-
when I get worried because Jeremy says, you should have a plan and follow your plan. And Ricky says, is that in your plan? But you can't say to me, here's the plan, and that's what we're following. We don't have our written, and then I don't know whether the plan goes by stock,
No.
by stock type, or by strategy.
So the other thing that we need to do, and in order to do that plan, I needed to kind of get the information back on your account size, any particular stocks that you really like, go through the quarter on quarter 30% growth and all that kind of stuff. So now what I'll do is I will write a vanilla plan for you, okay, on what we've talked about today.
Mhm.
Then you can change it. So I might say to you that the trading plan is that, you identify stocks with a 30% growth on quarter that you are particularly interested in, right? But then I'll say, an example of these stocks might be, and I'll give you the list of, say, my stocks as an example, right? Then I'll say that each day you go into your stock, you put them into a separate list. Each day you go into your stock list, and I don't know whether you know or not, but when you, can you just let me have remote control for a sec?
Mhm.
Just little things. I don't know whether you know or not, but if you click on a stock like that, if you're just perusing through and having a bit of a look at your stock, you just hit the space bar and it goes to the next one. So you go, okay, then I wouldn't be selling puts on that today. Okay, then I would not be selling puts on that today. Okay, then I wouldn't be selling puts on that. So you just hit the space bar and go through, and then you go, okay, FSLR, I actually own quite a few of those. 2 up days, I'm going to check the premiums for calls on that one. All right.
Okay.
So
Okay.
I will write the plan because that was what you wanted to get out of the coaching session, but there's no point in me writing that plan without me going through this, because then what's going to happen is you would get the plan and you go, what's she talking about? What does she mean? What? Why are we looking at those? Do you know what I mean? So
Yep.
That's the next phase that I will do, but it will be a little bit generic and a little bit vanilla, but it will be tailored towards your super account. And then when you get it, you'll go, okay, then that's fantastic. You might try that vanilla plan for a little while, and then you'll go, no, I don't want to do that. I really only want to sell the puts on those good growth stocks, but I just want to buy Amazon with my premium.
Mhm.
Okay.
So you may change it to suit you, but in order to write a plan, there was no point me just giving you a generic plan. You know what I mean?
No.
That wouldn't work.
Yeah.
Wouldn't work. But now that I know a little bit more about your account size, And that's one of the things people don't understand. We don't want to know your account size. We don't want to know how much money you've got. We want to know your account size so that we can be looking at stocks, because there's nothing worse than doing a coaching session with somebody and we're talking about stocks that they can only do with a 100 plus account or a 500 plus account, and they've only got $10,000. You know, we've got to be really careful with what we do. So that is part of it, Nola, writing the plan and everything for you so that you will have that moving forward. But there's no point me just doing that and sending it to you because you'll go, I'm not really sure what she's talking about.
Oh, no, and I appreciate that. But I guess what I'm coming from is that I feel we're not together totally organised with our trading, because, you know, Malcolm does his study at work and everything's in his brain, and then I look at it at home and things are in my brain, and it's about us coming together, although he is in charge of the super account and I'm in charge of the trading account.
Yeah.
But
yes,
yeah,
the only thing you can sort of keep them separate and just, you know, get to say, hey, once a week and say, hey, this is what I did this week, this is what I did this week, this is fantastic, yada, yada. The only other thing you can do is start to use some of these tools and say you do a horizontal array here, and just as an example, if we go to First Solar, you might say on this day, and I always make it end on the thing, you might put a little line there and you might say sold a call, sold 3 calls, expires whatever, line on there. So if you happen to go in, Nola, or you know, if one of you is away or whatever, you can see that, you know, Malcolm's got a call there that expires at $98 on the 3rd of November. Okay, so
because he does do things, and I try to keep up a bit with the journal, but I don't really always know until I see it in the account. Oh, he sold a call. I didn't know that.
That's really up to you guys, but I don't know whether you have three. So that's sort of something that I would put on mine. Sold a call, expires 30/11, 3 contracts. Okay. Then I'd say, okay, I would have put that at $98 actually. No, I would have put that where I sold a call, 98. And then one thing that you need to do is just push this little cloud here to make sure it's saved. And then later, if you go back in, and it's sometimes good, you don't have to look up your journal. You can go back when you're going through in the morning and go, oh, that's right, I sold the call, it expires on the 3rd of the 11th.
Okay.
That's what I sort of do for myself. And just let me delete. I'm not sure. Have you got any templates set up for those things?
No.
No. Do you want me to quickly set a couple up for you?
Yeah, why not? Yes, please.
Yeah. Okay. So what I'll do, I'll show you what I'm doing and then you will be able to do it. Okay. So let's just go horizontal array. The horizontal array is sort of one of the favorites, which is this one here. That's the one you've got there is the horizontal line, which is fine, but the horizontal array is you know, probably a main favorite. So see this little thing that's come up here, that's your little favorites, little drawing dover. That's come up now. Okay. So let's just say I'll set up. Now, just want to show you a couple of shortcuts. If you go up to here, you can clone that and you'll get another one. All right. Okay. So what I'm going to do now is I'm going to go, all right, we'll make a template. So one of the things that you're going to do a lot is you're going to sell puts. Okay. So let's make them red. Or you're going to have a stop, actually, normally a stop. I usually make my lines the middle, the little, the next one up. I don't like the really, really thin one. The text I'll put on this is stop. So you're going to do a lot of stops, you know, when you set them up in the charts with Ricky. Now what we
Mhm.
do, I'll show the text. We want the text to be red as well because I like everything to match. And I actually like my text alignment to be over there to the right.
Mhm.
Be there. So that's our stop line. Save as a template. We'll call it the stop template. Save. We'll do another one here. And it will be, let's say we'll do an orange one. Orange line. Text. Oh, did I have it as text to? I like it to be a little bit bigger.
Oh, yeah. Yeah, yeah.
This will save you a lot of time
Mm.
instead of going here, and I'll show you how we're going to use them in a minute. This one here, you'll use that green. Sorry, there's just a little bit of a lag between when I push the button. So it looks like I'm going really slowly, but
No, all right.
and we just need that little guy to go on to the right hand side.
This is good because this won't need to be done in my coaching session then because I can practice it with my laptop
Yeah.
against the.
Okay. Okay. So for Malcolm, let's just we'll just use this. Okay. So let's just delete that, delete that, delete that. Okay. Let's say that we came in here and we owned 150 shares of First Solar. 150 shares of First Solar. Okay. So
Mhm.
what we're going to do is go, okay, then the premium is fantastic. The RSI is down here. We're not looking at selling. This looks really good. I get some great premium. I am looking at selling a call. Has been way up here before. Coming into the summer, people might be looking at putting on their solar and they'll start advertising a lot more because the sun's going to be coming. I reckon I'm going to look at selling a put at around $99 to $100. Okay.
Mhm.
So what I'll do is I'll get my little drawing thing, which quite often it won't be there. So you'll need to just grab it from there. And then once you've grabbed it once, it'll be there. So I'm going to get my little drawing thing here and I'm going to say here that I'm going to sell a put at $90, right? I always make
Sell
the thing end on the day that I did the transaction, so I can always look back and know when I placed that trade.
So is
Okay.
this selling a put, selling a call?
This one pretending we're selling a call because we own
A call.
150 shares, right? So we're selling a call and we're going to do it at $100. All right. So what we want to do is we want to pick the template for, oh, where's our little call? You rabbit. Just let me fix this. Just so I mustn't have saved the sold call. I must have saved the sold call one. Sorry, guys.
It's all right.
Okay. Let's do it. Okay, so say we go in here and we're going through our thing. Okay, yep, no worries. Okay, I want to sell a call. Okay, we'll go over here, get my little doobah. And I go, okay, I want to sell it full. Like I said, I line it up with the day that I'm doing it, so I can always look back and go, that was the day I sold that call. Put that there. I'll double click on it and I'll just apply the template of sold call. So all that's done for me, okay?
Mm-hmm.
Change my coordinates to 100. The only thing that I want to do now is go to the end of this and I will say expiry 3rd of the 11th, 21 by 3. Okay.
Okay.
So then whenever I flick through this chart, and then I'll just do that to save, make sure I save it. Okay. So I know that I've sold, you know, 3, oh, I said I only had 150, but let's say it was 450. I sold 3 contracts, they expire the 3rd, 11th, 21. So that way you can, without going to look at your journal, you know that on this day, the 27th of August, you sold a call expiring 30, 11th, da 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 da, for 3 contracts. If you want to, when you're in putting these little extra words on, you can hit enter there if you want to and go 421, and that might be the premium that you got.
Okay.
Okay, so then whenever you look at your chart, all the
Mm.
information that you want about anything and everything is right there. You know when it expires, you know when you bought it, you know how much you got for it.
Okay.
Okay, and whenever you want to put a new line on, as an example, you might have done a trade of Ricky's. Stop, you just go in here and you go stop, and then it's done. So when you're setting your charts up, this is really easy for you to do stuff because and it starts to make sense to you. Okay. So when you sell a call, you sell a put. When you're doing a normal swing trade, you might have a stop. You might have a target is always in purple, not usually in purple. When you do a stop and a limit buy is usually in bright green. Set up all of these little templates, and then whenever you go and look at a chart, it's easy for you to see, okay, that was what I did.
So if Ricky's setting up a trade and we want to set it up at the same time with our laptop open and use our template to set it up.
Yeah, you can
there.
easily do that. So say if he set a limit buy or something, you don't have to go putting the thing in, picking the color green and then typing in limit buy and then you just quickly do the limit buy template and then bang, you're there, it's done. Okay. So, and then anytime you want to, you go back and go, oh, okay, yep, then I know that I did this on that day with that particular stock. The only thing is, if you don't save it, sometimes it will disappear. Sometimes it'll stay there. Most people are set on a 5-minute or a 10-minute automatic save, but not everybody is. So if I go back to, did I set some up on Barbara? I can't remember. No. But yeah, you can set those up anytime you like from anywhere you want to.
Okay.
All right, this little guy here, you can move him around to wherever you want. If he's in the way, just stick him up there. And as I said to you, if you do one of these and you want to put one there, rather than going back and keeping on doing it, you can either hit clone there and it'll give you 3, and then it's really easy for you to do your template to change it because you just change it to your left click on here and go to template. So one of the things that we do is we have grey, and that's old stop. So if this was originally a stop limit, we might change that to an old stop and put a new stop up there. But what I would do is I would use that, I would clone it. I'd move the stop to where it had to go, and that's going to say stop because we did it as a template. And then this one, you left click on it and you go down and you change it to, say old stop or whatever your template. So you just need to create a few different templates, and then your charts are always up to date, and you don't have to keep going back and thinking, well, where did I sell that, or where did I buy it, or what was the expiry, or what was the this. In the long run, it saves you a lot of time. It really does.
Okay, that's great.
Mm,
Um, yeah, you'll find once you use that a few times, you'll use it a lot. So the main ones possibly that you want to look at doing will be a limit buy, a stop limit buy. We've done the
Mhm.
stop, an old stop
mhm,
target.
Yeah.
And if the keyword is there, like target, that's why I
Yeah.
put the basic keyword. Then you add your other little bits that you want.
Yeah. 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 No, that's great.
Yeah. Makes it
And
very
so let's go back to the stock with the investment, like your ones that you've bought. How long do you keep them? Like Tesla, okay, if you've made a couple of, or you're up at a couple of thousand, when do you sort of say, well, it's time to let that go and as an investment, or do you keep that forever? Like, what's your plan, Malcolm?
For Tesla,
Mm.
that's got 100 Tesla shares. They've just out of money cover calls on.
Okay. Oh, that's fair enough. Just
Yeah.
keep going.
Yeah.
Keep
Yeah.
doing that. Yeah.
that's
And
right.
so that's what. So do we try to build up all of the ones that Malcolm's got to be 100? Bearing in mind this is a joint managed super fund, so I've got a little bit
But
of
that's where
saving
we use the 30% quarter on quarter.
and the selling the puts.
Yeah.
But do we just keep on building on the ones we've got, or do you add another new stock in there,
Well, it's up
or do
to
you
us,
just
I
say,
guess, isn't it?
Yeah, it's
Yeah,
definitely
yes.
up to you. And you may have some stocks in there. I would go into Fingers and have a bit of a look. And if some of those stocks aren't performing well, honestly, bite the bullet, get rid of them. If you're in profit, get rid of them.
Okay.
And then, or, do the puts or do the calls until you get called away or whatever it might be. Because you don't want to be, and you don't have time to be holding flagging stocks. Well, you've got there, JD is a good stock. So a bit choppy, but it has been going sideways for quite a while. Yeah, and it is sort of pretty low, at the moment. If it come on. Keeps on. So that's a bit of a down day there. Now, I mean, it is trading at a reasonable-ish height at the moment on the daily, but if it happened to have a down day and it decided it was going to fill this gap, that's definitely something at this price that I would be looking at selling puts on.
Okay.
I don't know if you've got much of a holding in JD or not, but that's definitely something I would be looking at holding puts on, selling puts on. The other thing with your I tend to try and pull this down, so because the RSI is very, very easy to read, I try and have it down a little bit so that you're seeing more stock, and you because you do whatever you want, but a lot of people don't know how to change that. But yeah, JD's definitely something I would look at, and it's possibly going to fill this gap, even though it was over earnings. If it does fill the gap, definitely look at selling some puts on there, and you should get some good premium if it starts coming down. And if you were looking at this stock, that's obviously a bit of a pivot point. You've got a lot of support there. If you had your, I can't see them under there, but the support, and they might be up here. Support and
Yeah. Ours look different to Ricky's at times, and I think, why have we got green there or nothing there, or he's got red or yeah, ours don't sort of look exactly the same.
They're all written on the one sort of algorithm, but you know why they changed to red and green, don't you?
Support and resistance.
Yeah. So when this little fella now, because he closed, well, sort of closed below this line, if that closed up there, this line will turn to green.
To support,
Yeah. So, if you were looking at selling puts on this, you've got a nice little area here that obviously is a support level. So you might go, okay, I want to sell $60.80. I want to sell puts at $60. Okay.
Yep.
If it started coming back down again, but then if it came back down to here, you might go, oh no, I'm actually pretty happy to own them at 68. And go to here. So yeah, and you know, hopefully you'll get some good premium. Like I say, make sure that it's the down. But this is a very JD's traditionally such a choppy stock. I mean, have a look at gaps and gaps everywhere.
Yeah.
So don't look at JD and go, that gap's really unusual, because if you look back at JD, oh my gosh, it gaps a lot, both up and down.
Mm.
So each stock obviously is very, very different.
You
So
go to sell your put as a support, because that's the spot you're happy to buy them on a
Yeah.
support.
Yep. And you might decide to put the naked put indicator on just to double check what it is. But I probably use the support and resistance more than I do the naked put indicator.
Sometimes the green line is way above where the actual S is for the sell the put.
Yeah.
And that confuses me sometimes. I think, well, how come it works that way?
Well, yeah. So when, just to show you on the naked put indicator, something. If you have a look, generally what Matt would say is that when it's within this band, then you sell the put. Be very, very careful selling puts when it's here or below the 200. He doesn't like to sell puts when it's below the 200. Matt doesn't.
Okay.
I do, but Matt doesn't. Okay, because it can plummet very, very quickly. He would generally say, if you're looking at the naked put indicator, so it's just a little bit slow to respond when I'm controlling the screen. He would say that this is the band here where you're not even this candle. See this white candle here? Not even that one. Even though there's an S there, he most likely he would be a little bit cautious there. It's when the body of the candle is within the band, the green band. Okay, so these ones here, most definitely.
So not all those ones below, because that's what was confusing me, thinking,
Not
well, I thought it was
necessarily.
in the green.
No,
Okay.
supposedly the ultimate. But interestingly, if you had a sold a put on this day, most likely you would have been put shares. Because look what happened.
Yeah.
Okay, so you probably wouldn't have been overly happy. Okay, so I often sell below here. And if it's below, I don't even bother to turn on the naked put indicator. I go by my support and resistance and where
I think I would be inclined to do that too.
Only shares, so I mean that was obviously, you know, quite a good earnings. But yeah, that's just who they are. And even when you look at the last one, you know, they gapped up over the last earnings as well. So you know, you can get to know this. That's the good thing too about knowing, only having X amount of stock in your portfolio, is you get to know them perhaps a little bit better. And when you see a gap on JD, you're not surprised or concerned because that's JD.
Yeah.
Okay. All right. So I'll put together a little bit of a vanilla sort of strategy for you over the next day or so. And then you'll have, hopefully, I think that's kind of addressed all of the things that you wanted in your plan.
Good.
I think it was obstacle appropriate strategies and how I'm going to implement them. Self-managed, and a quick work. Yep, me too.
Yeah.
Trader, learn RLT super strategy and get insight into my trading plan. So I guess we focused perhaps a little bit more on my kind of trading plan, but it overall was born from the RLT superannuation strategy, but I have done it a little bit differently. So
really, yeah.
And the other thing just that I do sometimes is sometimes, say on JD, right, it's a fairly cheapish sort of stock. If I think that I'm getting good premium, sometimes I'll be a little bit cheeky with where I sell a put. So I might say, all right then, and I might have, you know, money to do, let's say $6,000. You might have money to do 5 6s, say 8 6s are 48. You might have enough to do 8 contracts, right? And use a 50 grand section of your portfolio, right? So let's just say you did 8 contracts on this. What I might do is go, okay, then I'm going to do 2 contracts or 3 contracts at $68. I'm going to do 3 contracts at $64. and then I'm going to
Mhm.
do 2 contracts at down here. Now you may not
Okay.
get paid a lot for those contracts. This is a little bit advanced. You may not get paid a lot for those contracts, but remember, it just gives you that little bit of extra income. So you might
Yeah.
get paid, I don't know, say $220 for these. You might get
Mm.
paid $140 for those, and you may get paid $30 for those. But when you add those up, the amount of shares that you can buy is really good. Okay.
Mm.
And the chance of getting put the shares way down here is very low. But if
Yeah.
you do, if you got put all the shares, we know you
Yeah.
have the money to do
Yeah.
it. But we also
Mm.
know that then you've got say 68, 64 and $50. The cost of those shares is going to be quite good.
Yeah,
You know,
exactly.
it's
Yeah.
quite reasonable because and most likely you won't get put all the shares anyway.
Mm.
So that's just another little kind of way, but you'll be buying more shares because you've done a cheeky put down here. Whereas if you did
Yeah.
sell 10 contracts down here, you're probably not going to get a hell of a lot of money. But combined with the one that's a little bit more, I guess you're diversifying your risk a little bit, and your risk profile is kind of like a little bit cheeky and a little bit less cheeky and, you know, quite safe. So that's something else that I do to keep in mind. I won't write it into the strategy, but that's something else that you can do.
We've done it a couple of times.
Yeah.
Yes, we have done that a couple of times. And yeah, I get what you're saying.
Yeah, so
Totally.
then it gives you the opportunity to, you know, maybe pick up another 1 or 2 shares at a put level that you're not going to
Yeah.
be put at. But then, as I say,
Yeah.
if you get put the shares, then, you know, and you happen to get put all 3, the
Yeah.
price that you're getting put them at is quite reasonable.
Yeah.
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 Okay.
So we're pretty well. I'm pretty familiar with covered calls and selling puts, but yeah, the other options. Even though we did Ricky's options course, he's ages ago, and we've got his book on
Yep.
all of that. We don't practice his options strategies. We don't do the super
Yep.
collars and the
No,
you know,
I
the-
would, and honestly, when I'm talking to you about the superannuation account, I would be sticking to what we've just talked about.
okay.
You know, and
Good.
in essence, you're doing a bit of a collar anyway by the fact that you are
Yeah.
Oh yeah,
selling a call and selling a put on the same stock
Yeah.
within a few days of each other, but they are
Yes.
separate transactions, and they are transactions for a purpose of picking up a few shares.
Mm-hmm.
Yeah.
Okay.
Okay.
Well, that
So next session should perhaps be your trading account.
it will be with Cheney, but I also want to ask her a couple of things that are just puzzling me. These moving averages absolutely do my mind in, and I might just try and do a little bit of research before our session to see what
Yep.
I can understand about them. And I am just so confused about how you use the daily, the weekly.
Okay, because what I might do, I know you don't have a lot set up across the top here.
Yeah.
I might set you some favorites up there specifically for your account, because the ones that you've got here are not, you could possibly get some better things up here for yourself. Yep. Some better favorites.
Okay. So what do you mean? Rather than the drop down on the indicator.
Yeah,
on
it's up to you, because what we'll do is we'll combine 2 or 3 or 4 of them and just make them so that, you know, depending on what strategy it is that you're using, then that's what we want to look at. So
Yeah.
I have one like for crypto, and it's the 6 and 96, and I look at when they cross and, you know, that sort of thing. So
Okay.
Malcolm does crypto. I don't do
I love
crypto.
crypto. Oh, that's my thing, Malcolm.
Oh,
Well, we sold all ours the other day.
yeah, when
Everything.
when you said, or Ricky said that he'd sold his crypto, I said to Malcolm, I think you better sell, because we didn't sell any the last time that he
Oh,
said to sell off.
Yep,
But
that's
we're
fine.
looking to buy back in again.
Yeah, yep. Yeah, no, I've been, I'm probably only I'm not in much cash now. I'm probably only got about 10% sitting in cash. Yeah, but I've done very well on Sol, ADA, because I did the crypto course with Joseph. The
Is it
crypto
one of Jeremy's thing, was it?
group with Joseph Muto.
Mm.
A lot more than what I used to know, and I love crypto. So my aim is that I would like to do a bit of a crypto mentor group in Australia. I'm going to work with Joseph a little bit more on that sort of thing. So yeah,
So is that a course on Jeremy's platform, is it?
you
The-
can get the crypto course on Jeremy's platform, but there is a mentor one that you can do with Joseph. What
Is that's what you did, is it? You did the mentor thing, did you?
Yeah, so what happened is because all the Aussies missed out because they snap up so quickly, because we all missed out, I reached out to Joseph and I said, look, we've got a heap of Australians that really want to do the crypto course. And so what I did was I arranged one for Australia. I had it in the Slack channel and arranged one for Australia. So there was 6 of us that did that. And then yeah, when they do the next crypto one, I'm hoping that we'll be able to get some more people to do
Yeah,
that.
well, I'd certainly be interested to do it.
Put
So
Malcolm down now, it's definite, and then you've got one.
Yep.
yeah,
So it's about, I think it's about, gosh, the other one was 400 odd US or something like that, for 8 weeks. But the interesting thing about it, and I think that you would really like about it, is that he is basically teaching you how to be an independent crypto trader. So he's teaching you how to research the coins, how to, I mean, I do staking in that now. Yeah, he teaches you those sorts of things rather than, because you sort of can pick a strategy up anywhere. Yeah, he does give you a strategy, but you can pick strategies up anywhere. He doesn't teach you how to read a bloody candle and all that sort of stuff, because we should know that kind of stuff. So he teaches you about the crypto world and the hows and whys, whats and wherefores, and what they think is going to happen in the future. So
That's perfect.
isn't it? Yeah.
Yeah. Oh, well, that would be wonderful. Do you think there would be a few more if another course could be arranged for Australians?
I think because of the success that we had with the last one, so I've got a bit of a one-on-one sesh with Joseph anyway, coming up, and I will be talking to him about the Australian one and talking again about staff meetings. So hopefully I'll be able to organise that, and I'll definitely put you in that one.
Fantastic.
Great. That would
Okay.
be, yeah, that would be
Had
really
about
good.
3 or 4 people that missed out, so yeah, we'll probably
Yeah.
have
Oh,
people
excellent.
in. So yeah, and I may
Yeah.
jump in the room just to, you know, further cement my knowledge on it, because Joseph is very time poor. So yeah,
Oh, that sounds good.
Fantastic.
yeah.
Yeah, but with
Listen, I know.
regard to,
Yeah.
sorry. No, you go on.
No, I know that you did indicate that you probably already had this strategy a bit down pat, but hopefully I've teached. Hopefully I have a couple of things in
Yeah,
taught.
We'll
absolutely.
start a dictionary on you if you're not careful.
Oh, I know. I don't know what's wrong with me. I think I'm getting dementia or something.
Tired. tired.
But yeah, hopefully I've taught you a few
Absolutely, yeah.
little bits and pieces and made you perhaps look at it a little bit differently, and you know,
Tightening it up.
yeah,
I think you've tightened it up
absolutely.
for us.
yeah, and
Yeah.
I will write the plan, which will tighten it even further. But like I said, it will be quite generic, it'll be quite broad. But what I want you to do is, you know, I'll write it, and then I tend to leave a little bit of a gap in there, and I'll make it into a Word document so that you can then go, okay, and write a little description below that on what that means to you. So if I
Yeah,
say to you,
absolutely.
I say to you, you know, that I want you, you know, that look at stocks at quarter on quarter, blah, blah, blah. Here's an example of some stocks that I use, and I write my stocks in there. You can then go into the Word document and take a copy of it and change it and start adding the stocks that you want to have in there. So then, you know, rather than just a generic one-liner, you personalize it to you. So I do my plans a bit differently.
Yep.
That sounds perfect.
It does.
Sounds very good.
Well,
But
that's
yes,
good.
just one, as I said very briefly, when Ricky's saying, oh, let's look at it on the 30-minute chart now. Let's look at it on the
Yep.
15 and then daily, and I think, but I wouldn't know. Like I do all my buying and selling based on the daily. I
Okay.
wouldn't know
Yep.
what the 30-minute is telling me.
Yep.
And I wouldn't be able to
And that's
buy a
fine.
stock based on
Yep. That's fine. And when we get together and have a little bit of a chat, then we can, you know, when you return your thing to me and you say to me, oh, look, I only really like to use the daily, then that's what I will try and work around. So there's no point.
I'd like to learn about the other. It's not that I just
yeah,
do
most
that.
definitely. I can show you those things. But as far as if you prefer to trade just using the daily, then that's kind of what we do. know,
Okay.
really good
And
strategy.
also,
All of that is
No,
time wise. You know, I don't trade at night ever.
okay.
Don't trade live ever. Doesn't interest me.
Mm,
I'm
okay.
tired. You know, I can't.
Yeah.
I don't want to stay up all night and all that. I like the sunshine. I'm not, you know, like a
Yeah. Yeah.
I like the
Well,
sunshine.
yeah, Friday night I stayed up and it was ridiculous because you get so addicted looking at it.
Yep.
And made $520 by selling off 40%. Like I've got 100 shares of this company that I bought and I sold off 40 shares.
Mhm.
And I could have just set and forgot. I could have just set it at the price I was willing to sell it at and go to bed and
Yeah.
then go, well, if I don't get that price, too bad. But that's very hard for me to do.
Yeah, well, the other
I
day,
have-
WTC, I mean, I don't like Australian stock much because it doesn't really do much, but WTC had a massive, massive gap up. So I just jumped on and traded that for a little while, and I think I made $700 something while I was doing some other things. But I don't want to stay up all night and watch the American market and sit there, and then the next day you get out of bed at 12 o'clock and half your day's gone.
Well,
Yeah.
this
Doesn't
is what's
interest me.
exactly, yes.
No,
This is one thing I was going to say about that, but hang on, my brain. Just one sec. Oh, was it not about that stock and the no, it's it's totally gone. Doesn't matter.
So you'll say this on Google something or other, won't you? Google, you know, about that
Yeah.
thing, don't you?
I don't know how we've saved the other ones. I can't find them at all.
I might be able to get Ricky to resend them to you, but what I'll do is when I stop recording this one,
Mhm.
it takes quite a while and it needs to download and whatever else, and then I'll send it to you in an email.
Right.
Yeah, with a spiel and then the generic sort of plan that I want to formulate. Well, it's not generic, it's specialised to you guys. They're in a Word document, like I said, and it'll be, you know, lines, and then I'll have gaps there that you can just go and fill in and make it your own.
Okay, fantastic.
Right.
That's
It'll give you
great.
the basics of whatever else. So I'll tell you the stocks that are in my list and all that, because you did specifically say in the thing that you want to sort of know where I, you know, what I do and that kind of stuff. So yeah. Okay.
Okay.
All right.
And I might think of what I was thinking. I'll text you a quick question, but I can't think of what it is now.
Fine. That's fine. All right. Well, it's 20 to 5. No, it's 20 to 5. I'll stop the recording now.
Yes.
Thank you very
Okay.
much.
No, it was great. It was good. Have we stopped the recording?
No, I haven't. I'm scrolling. Stop your share. Here we go. Okay. Now we can
Yeah.
swear and drink and
Yeah, because it's just you know, the pace is good. Like with Ricky, I always find my brain is just racing because it's like when Monique listens to something, she listens at 1.5 speed,
yes.
and I go, oh, God, how do you do something at 1.5 speed? I can't. Young people's speed is just too speedy for me.
Well,
but
yeah, I
it's
just
clarifying that we've understood things.
yeah, and it's really difficult because I never know what level people are at. So what I kind of do is start with the basics, and then I draw it and say, yeah, okay, you're going to sell a put here, and then you're probably thinking, oh my God, why did we even get this coaching session? She's just telling us stuff we know.
Well, look,
Just
I
building
would have to
and
say,
building on it and building on it and building on it, so that then we get to the point where you go, oh, okay, yep, okay. Yeah. So
that is, we probably did know 60 to 70%, but it's clarification, it's building,